Bitcoin Spot ETFs have been around for a few months now, which means that to have exposure to Bitcoin, you don't have to buy the crypto anymore. You can just select one of these ETFs that tracks the price of Bitcoin and put it in your regular investing account. There are currently 10 ETFs that you can choose from. The question is, what's the best one? Some of the famous YouTubers have already done videos trying to answer these questions, and I did my research and watched all of them, and they were really good. But I think they didn't take the approach of just analyzing the ETF itself. So that's what I'm doing today. I'm not gonna talk if Bitcoin is a good investment. I'm not gonna talk the difference between spot and futures ETF. I'm just gonna analyze it just like if I was analyzing an S&P 500 ETF. And just a quick disclaimer, nothing here should be taken as financial advice. It only represents my opinion. And also, I did a bunch of research and I'm gonna get technical and nerdy, so hopefully you understand. Let's get to it. So there are currently 10 ETFs that track Bitcoin in a spot basis. So what I did is that I selected a few metrics for ETFs and I will be picking the winner for each one. And at the end, the overall winner and my pick. The first one is expense ratios. And the top 5 lowest expense ratios are actually pretty close, between 19 bips to 25 bips. And then at the end, you have Grayscale, which has 1.5%, which is super high. But the overall winner is Franklin Templeton EZBZ with 19 bips, which is pretty cheap. Then for dividends, there is no winner because Bitcoin does not pay any dividends. So no ETF will pay anything to you. You're just gonna make a gain if you sell it at a higher price. As far as market price, ARK and Invesco are gonna be the best ones as far as assimilating the actual price of the Bitcoin, because you can just grab whatever Bitcoin is trading for and divide it by 1,000, and that's the price of each share of the ETF. So for example, Bitcoin this Friday was trading at 68,000, so each share of ARK and Invesco was around $68. I like this because it's similar to the approach that SPY has with the S&P 500, where to get the price of SPY, it's pretty much the price of the S&P 500 divided by 10. So Invesco and ARK are the winners here, but the cheapest one is gonna be BRRR. Then as far as volume, Grayscale has been having the most volume recently, but that's not necessarily because there's a lot of demand. Grayscale Fund, or GBTC, has actually been around for a little bit because they were a future Bitcoin ETF before they transitioned into a spot ETF. So a lot of the volume has to do with the fact that some people are going in or going out because the fund strategy has been changing. So disregarding GBTC because of the change in the fund strategy and also because of their 1.5 expense ratio, BlackRock's IBIT is the winner in this category with the most volume. And with assets under management, it's the same thing. You have to disregard Grayscale because they're still transitioning, and the winner is BlackRock. Then for options, so being able to buy or sell calls or puts, the winner is no one because currently the SEC does not allow a market for options on Bitcoin's ETFs. But if the SEC ever gives the opportunity to investors to do options on Bitcoin ETFs, it's gonna be very, very, very interesting. And the ETF with the most volume and liquidity is probably gonna have the best market for that. So something to keep in mind for the long term. And then for leverage, it's the same thing. Currently, the SEC does not allow any Bitcoin ETFs to be more than a 1x leverage. But if they ever allow to be 2x, 3x, or even in the negative leveraged, that's gonna be very interesting. Then for price performance, here's where I disagree a little bit with the video that Andre did. He put a heavy emphasis on what was the ETF that had the best price performance based on the purchases that he did, which he bought all 10 of them. And I don't think this is the right approach, because that's the approach of when you're doing single stock picking, that you want to have one that outperforms all the other ones. However, for ETFs that you have an underlying asset, you don't want to have a better price performance. You just want to be tied to the underlying asset itself. But the weird case is that usually ETF have a basket of stocks that is tracking, like the S&P 500 has 500 stocks. For this ETF, you're only tracking one thing, and that's Bitcoin. And that's the reason why most people say that instead of buying the ETF, you should just buy the Bitcoin itself. And I don't necessarily disagree with that statement, but for the sake of this video, we're just looking at the ETFs at hand. And for this category, it was Fidelity that had the best price performer, with BlackRock coming at a close second. But the difference across all of them was around 0.2%, which is not a huge difference, so it's not a deal breaker. What is a deal breaker, and for me the most important metric, is tracking error. This is basically how does the ETF perform compared to the Bitcoin itself. So if we take a look at the graph of Bitcoin against the 10 ETFs that we're looking at, you see two things. The first one is that the ETFs have been pretty consistent in tracking the price of Bitcoin and just following the path of going up when Bitcoin goes up and going down when Bitcoin goes down. And two, you see a line that goes continuous, which is Bitcoin, but then you also see some gaps where there's no data for the ETFs. That's because Bitcoin trades 24/7 compared to the ETFs that trade during market hours between 9:30 a.m. to 4 p.m. This can have some separation between the closing price and then some shifts over the weekend, for example, which might increase the tracking errors for the ETFs. But to make it more simple, let's just look at a graph of also the ETFs against Bitcoin for just last Friday. You see that there are some differences between the actual performance of the Bitcoin versus the ETFs. It's not huge, but if you do the same comparison for the S&P 500 and the top 3 ETFs that track the S&P 500, you're gonna see that the tracking error and the differences are much smaller. So, who's the winner as far as tracking error? Well, the answer is that it's actually a little too early to tell. You need to have at least a year of data to determine what's gonna be the ETF that tracks Bitcoin the closest. And that's gonna come down to the ETF's model, the trading volume, and in my opinion, most importantly, to the manager's experience. And for that, because of manager experience, I think that BlackRock and IBIT is gonna be the best one. With BlackRock being the biggest asset manager in the world, and also IBIT having one of the lowest expense ratios and all the other things that I mentioned, I think that if I had to pick a Bitcoin ETF, it would be IBIT. And if there's ever an option to have an option market against the ETFs, pun intended, I think BlackRock is gonna be the best one because it has the most volume and the most AUM. So if I had to pick one, I would pick IBIT. But if you made it this far in this video and you saw last week's video, you know that I'm personally not a fan of crypto. So for now, I'm not gonna buy any of them. But how about you? Let me know what you think. Let me know which one you'll be buying in the comments below and I will check it out. Thank you so much for watching and I'll see you next time. Peace.